Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Fisker Automotive, ticker symbol FSR. And so here we can see the chart on the weekly time frame, and it looks like we did put in a lowest close for the week at a price of 78.36, but it does also look like we have been respecting more or less this level with wicks coming down and closing above. So while this is a lower close for a weekly close, it does look still pretty strong, and we did not put in a lower low for the week on the daily time frame, and that lowest wick did come down to a price of 72.55. But if we do switch over to the daily chart, we can see that we did actually start the week off with a bearish engulfing candle, opening above last Friday's candle, closing below. Then we did get a green candle following that day, but then again on the 7th, just barely putting in another bearish engulfing candle. So not looking too good in that sense, but we have seen a lot of sideways consolidation. So I do think that is good, especially because we have not seen volume increasing a lot on the down days. It has been relatively flat. So I do think that could suggest that this is bullish consolidation or potentially a bull flag. However, this did come from the top down, so it's quite possible this is bearish consolidation and this could break to the downside. And so on that note, I do want to go over some levels that I have drawn. Some of them I went over in last week's video, some of them are new. Pretty much all are Fibonacci levels, with the exception of this purple horizontal line at 74.67, that being the lowest daily close that we have seen. And we did get a close close to that on the 7th. So on Wednesday, the close was 74.79, so just above that purple line. So I do think it is good that we are not putting in lower daily closes. Also, what I did add, I believe I added this during a live stream, was a downtrend here. I did adjust it a little bit for this video, and that is based on the high on January 23rd and the high on January 30th. And so from that, it does look like we have formed this wedge, and that price has potentially broken out of that. However, I do want to note that while this wedge could be breaking to the upside, and that is the direction that I'm leaning in it going, this could also be a descending triangle, and with this level of support down here, since it's been tested so many times, it's quite possible that level will break. Descending wedges do tend to break to the downside, so that is something to be cautious of. And with that, I'm just going to go over these Fibonacci retracements, two going from the bottom to the top that should suggest levels of support, whereas this one coming from the top down could suggest levels that price could be going to on the upside. But to start with levels of support from this orange retracement, I really just have the 100% level marked based on this low, which is at 76 cents. Does look like that has recently served as support. Also, then looking at this yellow retracement, that level at 76 cents does seem to correspond similarly with the 786 here, and that being at a price of 77.2 cents. Again, getting the weekly close above that level, I do think that is good that these two levels do seem to be acting as support or near support, with a couple tests lower, like hitting right around 75 cents, which has served as good dip buying opportunities. However, it is quite possible we do break lower, like going back to this 100% retracement at a price of 72.55, something to be aware of. But then also going up to the high here at 94.3 cents, it does look like the 382 level did serve as brief support, but then resistance. So that is something to note. I do think that level will be a key one to break above. So right around 86 cents. And then if we do extend the y-axis down a little bit, last week's video, I did point out this 1618 level from this orange retracement at a price of 54.37 cents. If we do the same type of extension, the 1618 from this yellow retracement, that would put price at 59.11 cents. So quite possible if we do break below 75 cents and hit a lower low, it's quite possible we might visit 59 or 60 cents. So something to keep in mind, but ideally that won't happen. Ideally, we will be breaking out and breaking to the upside, like testing $1 that I have marked here by this dashed line, or the 786 level from the white retracement at a price of right around $1.03. So those are two levels that I think we'll want to be paying attention to. But then if we do adjust the axis to the upside, we can see a couple levels up there that price might be going to. From this white retracement, the 1618 is at a price of right around $1.35. Quite possible if we do break above $1 and hold, especially if we break above $1.03 and consolidate there, forming a bull flag, it's quite possible we could be moving higher, like to $1.35, or potentially this red line that I have marked at $1.41, which if we do take a step back, that does correspond with the close from December 6th. That does seem like it was support over here. And if we do throw up the volume profile, that does also correspond with this volume shelf because of this consolidation here. So if we can break above $1, the volume shelf, the consolidation there does seem to dissipate, so we could definitely be making a move up to $1.35 or $1.41 potentially in the next couple weeks. So do keep an eye out for a dollar close. Closing above that level is key, especially with it being on the New York Stock Exchange. We want to get a close above $1 before the end of the month, so we'll have to see about that. But yeah, I do think it is looking pretty good as far as the consolidation that we've seen. But I do think that we really need to start breaking above these levels. But then especially $1 and $1.11, we want to see higher highs getting put in this time frame, and especially not lower lows. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe for more videos like this. Thanks a lot for watching.